Good morning and welcome to Thursday, the Bubba Show. I'm Bubba. So today I thought, again with lack of news and because we don't talk about that unmentionable anymore on Thursdays, I thought we'd talk a little bit more about option volatility and what it means and actually volatility in the overall market. Volatility in the overall stock market or option market or futures market, there is some standards. Now, for months, the average range, for example, in the S&P would be, let's say, 15 points a day. That means it goes up and down around 15 points. So if it closed at 1400, 1393 to 1407, something in that range, you would trade in that range, you would get movement back and forth. And that would be the volatility. In times of real good volatility, we might get 20 or 25 points movement back and forth. Well, what's happening now is the average daily range or volatility in the S&P is now under 10, which tells you that the market is in a tortoise move, which tells you that when stocks are breaking out, they're not breaking out as far as they want to, either up or down. The lack of volatility creates lack of movement. It creates what we call complacency. When you understand that, again, it gives you a better chance as the investor, trader, to give yourself a better opportunity to pick and be in the right stock. Now, obviously, the higher the volatility that we can have, the better it is for traders. It doesn't give you more winners. What it does is it gives you more forgiveness on your losers. Okay? Remember, we are in a business that if you're following the proper protocol and the rules that we dictate, on a stock you're never going to lose more than 3%, on an option you're never going to lose more than 30%. So no matter what the market conditions are, we know that our fixed losses or fixed costs are X. The difference is when you get in high volatile markets, they give you more opportunities to get in and out. Your stops remain the same, but instead of making 10% or 8% on a stock, now you have the opportunity to make 20 or 30%. Instead of making 30 or 40% on the option, now you have the chance to make 200 or 300% on the option. Okay? Also, it creates more opportunities to trade. Although you get more stop outs, it also gives you more buying opportunities or selling opportunities to allow you that opportunity to be in the market. And being in the market is what we want to do, because if we can turn our capital over, we can make a small account look like a bigger account by trading small size but trading more often. So that's what I want you to kind of understand about how volatility works. The tighter it squeezes, the more challenging it is, the more conservative we want to be. When it loosens up, we can be more aggressive. And those are the things you want to watch it. Remember, Bubba's picks, remember the calls, and remember, for Thursday, the Bubba Show, we'll see you on Commodity Corner Friday.